One.
Hi, everyone. Good morning, afternoon, and evening, depending on where you're joining us from today. My name is Danielle Martel, and I'm a Managing Director at Accenture focused on strategy and innovation. I'm pleased to be kicking off today's Digital Dollar Live 2 event, hosted by the Digital Dollar Project, the partnership between Accenture and the Digital Dollar Foundation to support exploration and advancement of a U.S. central bank digital currency. Many of you may have joined us for our first live event in July. At that point, we had recently published our first white paper, and Giancarlo, DDP principal, had testified in multiple congressional hearings on the topic. During the summer session with the Senate Banking, Housing, and Urban Affairs Committee, Chairman Crapo asked for our proposed pilots, which we have since provided in addition to publishing on the DDP's website. Since the summer, there have also continued to be exciting advances in the market, both domestically and abroad. A few points worthy of note. China recently distributed 10 million yen to 50,000 citizens via a lottery system to test effectiveness of a production CBDC. The ECB also recently released a report on a digital euro. While no concrete next steps were outlined, still yet another signal that CBDC is being seriously considered versus just a research endeavor. Also in the U.S., the Attorney General published a cryptocurrency enforcement framework, and the White House also released a report on the national strategy for critical and emerging technologies, in which distributed ledger technology was highlighted. The DDP continues to take the position that a successful CBDC requires partnership and collaboration from both the public and private sector. This was in fact in line with Federal Reserve Chairman Powell's remarks in a recent panel discussion on cross-border payments hosted by the IMF. Aligned with the DDP's positioning, Chairman Powell also stated that he thinks it's more important for the United States to get it right than it is to be first, citing key areas where trade-offs need to be thoughtfully assessed. Recognizing that privacy is one of these key focus areas, in early September, the DDP stood up a privacy subgroup, which includes members from our advisory group, in addition to other industry, legal, and privacy experts, with the objective of establishing a set of principles on how a digital dollar could approach this complex and very important topic. These principles will be reviewed by our advisory group and subsequently shared with the broader public for input, much like our white paper was earlier this year. We continue to be very excited about the prospect of a U.S. CBDC and are advocating for the next phase of work to focus on pilot programs. Testing key foundational elements through a series of thoughtful pilots will enable the U.S. to continue on the path toward a future CBDC. With that, we have an exciting agenda for the next 90 minutes. First, we'll talk more about the partnership and the project, and then we'll have 3 esteemed panels. First, a global update on CBDC progress with some of our international stakeholders, followed by 2 panels focused on use cases. First, institutional and wholesale, followed by retail, before we close with final remarks. Thanks again for joining us today, and I look forward to the lively discussion ahead. And with that, I'll hand it over to Daniel Gorfine.
Great. Thank you so much, Danielle. So I'm Daniel Gorfine, a co-founder and director of the Digital Dollar Project. It's great to welcome everyone to our second Digital Dollar Live event. A lot has occurred in the last couple of months, so we're excited for today's session. I do think one of the key takeaways from Danielle's update is how we seem to truly be at an inflection point in terms of interest in and activity around CBDC. We seem to be moving from the if to the how, or what a CBDC might actually look like in the wild or in real-world application. In the U.S., we are seeing increased attention to this topic, including, as Danielle noted, from the Federal Reserve. And I want to underscore that we're starting to see substantial activity amongst regional Fed banks. For example, the Boston Fed is doing important work in this space, and I suspect we're going to talk more about that during today's event. We view this as great news, and we have consistently messaged that we think it is crucially important that policymakers and the private sector alike help to support and advance these efforts. Ultimately, a CBDC project is going to require a big tent approach that incorporates many different views and perspectives, something that we've attempted to do in the build out of our advisory group, which represents many different stakeholders and perspectives. This is why we also believe in conducting real-world pilots and trials. As Danielle noted, this will give us the empirical data on outcomes that can help us demonstrate the benefits and remaining challenges that exist around CBDC. So today we do have a great lineup of panels that can discuss the state of global efforts, institutional and wholesale use cases for the digital dollar, and domestic and retail applications. I'll be back towards the end to try to wrap up what I think we heard today, along with Chris Giancarlo. But with that, let me turn it over to our colleague, Usman.
Thank you very much, Daniel. And hello to all the conference participants. This is an exciting project. I have worked on issues related to the international monetary system for years, and the topic of this discussion is very close to my heart. I would like to reiterate, the debate about CBDC has changed significantly. During the past few weeks, CBDC has been elevated from the fringes to the core of the international economic policy agenda. Two CBDC issues now seem to dominate: CBDC as an instrument to strengthen payments, and CBDC as a vehicle to advance the international role of national currencies. The former was revealed during the IMF annual meetings the previous week, when IMF Managing Director Kristalina Georgieva stressed that CBDC could be instrumental in addressing key deficiencies in international payments. The latter was highlighted with the ECB report on a digital euro, echoing similar ambitions by the People's Bank of China. This followed publications by the Financial Stability Board that now offers a timeline for CBDC development milestones through end 2022, and the BIS call for international considerations to be integral to any CBDC design. The ECB report on a digital euro made a radical proposal that a future digital euro would have to be held by non-residents, offering an entirely new avenue to international payments. The G20, under the upcoming Italian presidency, will now continue work on international payments, which is set to include CBDC, thus raising the policy momentum. CBDC will come. It lends confidence to token-based financial market infrastructures and issuers of token-based assets. It has become part of a wider aim towards supporting greater diversification in finance by actors, mediums, and geography. We have a fantastic panel to discuss CBDC, covering topics such as global CBDC initiatives, the market for tokenized assets, and how CBDC will interact with legacy systems. Tom Mutton is Director of FinTech at the Bank of England, who very recently in a speech highlighted that CBDC is a key priority for the bank's work on FinTech. Josh Lipsky is Director, Programs and Policy at the Atlantic Council, where he recently co-authored a paper on a global strategy for shaping the post-COVID-19 world with a focus on digitalization. Sobnendu Mohanty is Chief FinTech Officer at the Monetary Authority of Singapore and one of the key pioneers of CBDC at one of the most advanced central banks on CBDC. We have 20 minutes until lockdown. This is a moderated discussion. To start, Tom and Sobnendu, could you offer your views about recent CBDC-related events, and what are key CBDC-related projects you have been conducting at the Bank of England and the MAS? Tom, why don't you start, please?
So thank you to everybody at Digital Dollar. It's a huge privilege to be here with you. Recognizing we only have 20 minutes, so I'll try and be super brief, and I really mean it. I know those famous last words. We put out a discussion paper back in March about our sort of provisional model of central bank digital currency in the UK. That was focused on domestic use, particularly in the context of payments. We recognise there's a big prize for international use as well, but really this has to start at home. We have to get things right domestically and make sure we're addressing the payments needs of people in our home country. So we put forward a discussion paper with a platform model that had a strong role for private players, but also a clear role for public central bank provided infrastructure. We're considering the responses to that paper now. We've had a huge response. We're delighted with the level of engagement we've had from right across the range of stakeholders who are relevant to us. Basically, where it goes from here is two types of questions: policy, economics, analytical questions, monetary stability, financial stability, all the stuff you would expect, but also technology issues. We're going to lay out a roadmap for how we're going to think about those. But one thing that will be absolutely essential in that is collaborating both domestically and internationally. both with other central banks, but also with a very wide range of stakeholders, both official sector, private sector and civil society. Central banks can't go it alone. We don't have all the answers. Daniel referred to a big tent approach. I couldn't think of a better word to describe it. That is exactly spot on. So in the UK, really excited about this. I think it's very positive and really looking forward to the discussion today.
Hi from Singapore. It's late evening. Let me start saying that I will do no more experiment on CBDC because I've spent 3 years experimenting this damn thing and I have come to a conclusion that works. So no more experiments from Singapore on CBDC. We have made a clear paper out there and we have called out that the wholesale currency needs to get a production life. And we are quite committed to get it out there. And by chance, if you have not caught up this news, for a brief second, the DBS Bank told the whole world they're actually putting an exchange for tokens, and they took it down in a less than a minute because they just promoted by mistake that whole website of launching that digital exchange. So it created a lot of noise in the system, but it clearly shows that Singapore is pushing ahead. And we're going to push ahead strong because we strongly believe the wholesale currency has a clear efficiency objective. And there is especially when it comes to cross-border payments, the settlement part needs an answer. Existing framework and technology is not working. And we believe wholesale CBDC is the answer to the solution. So we have to get that. In terms of other use cases, the market has responded strongly during the COVID-19. As an example, Singapore one of our startup launched a fractionalization of the bond called e-bond value. They've taken a bond, made it small bite size using the blockchain network. In Asia, Philippines issued their treasury issued bonds, I think bonds in a blockchain register. So Asia is marching ahead on the whole production license of blockchain, and as somebody said, that China is already out there experimenting with the currencies. But I'd like to say one thing fundamental, which I think all of us forget. There's one country in Asia who has actually done a production-grade retail CBDC in its true form, and that's called Cambodia. I strongly urge you should not get lost in what Singapore has done, what China has done. All of us should actually go and examine what Cambodia has done. It's the only country in the world which has issued a production-grade retail CBDC. And the beauty of that whole launch is when you go to that web page, it doesn't talk about CBDC. It is a retail payment system innovation. What it says, that retail CBDC is not about a replacement of cash. It is a fabulous RTGS system, cheap, better, and far efficient than what we have today.
Excellent, very good. Josh, I mean, we've heard now some focus on international payments, some more on domestic payments. You have been tracking CBDC developments around the world. What do you see sort of as the emerging trends? Where do you see CBDCs likely to have its biggest impact going forward?
Well, thanks, and thanks for having me today, and thanks to everyone at the Digital Dollar Project for all the fantastic work you do to move this conversation forward. So at the Atlantic Council, in collaboration with Harvard, we started a central bank digital currency tracking project. And we've now mapped what about 70 countries in the world are doing. And just to give you a sense of the acceleration, when we started this 8 months ago, we had about 40 countries on the map. So it just shows you what COVID-19 has done to move things from research to development to pilot so quickly. And I encourage everyone to check it out. We can share it later. And, to my colleague from the MAS, completely agree. What you said from what Singapore is doing and what Cambodia is doing. So Southeast Asia in general is a leader in the field. And we can look at South Korea and what they're doing. We can look at Thailand and what they're doing. And so what's so interesting about the trends right now is that COVID-19 and stimulus and fiscal spending have really accelerated the thinking and changed the way people think. And so one thing we see happening is that central banks are now having to be a little more creative about how money is delivered. They need to get money to the unbanked quicker in this crisis situation. And they're experimenting. And even countries like Russia that previously were sort of saying, well, we don't need to do CBDCs, as the governor had said, even in the last 3 months, we see the tone. And one other region I would point out for everyone is Latin America. not discussed as much as Southeast Asia, but very important. So Uruguay, we know they had a very successful pilot project and they're doing more development. And this has been a little off the radar, but Argentina, just this week, the central bank said that the yuan can now be used in international trade. And that was a big thing for the Central Bank of Argentina to say. Now, obviously, they're just talking about hard currency. They're not talking about digital currency and a digital yuan. But when the discussions happened in Argentina at the central bank, one of the things that made it more attractive for the central bank to agree to usage of the yuan was the potential for instantaneous settlements of transactions. And so you can see the roadmaps being laid out all over the world for the path forward on CBDC and how that's changing the conversation, especially in emerging markets and developing markets. And it's the advanced economies, as Tom knows and others knows, that are actually a little behind the game.
Thank you. Thank you very much. I mean, one has to say that in Europe as well, I mean, we have with the Riksbank, obviously, a key project on a possible retail CBDC, with the Central Bank of France as well, very advanced in terms of wholesale applications, in particular in an international setting. But I think the point, Josh, you made about how CBDC can equip currencies with properties that will make them more attractive, in particular in international transactions, is certainly a key issue. I'd like to switch to the tokenized assets, a topic that we wanted to touch upon. We have seen relatively little in terms of pickup of tokenized assets. Do you think that CBDC could be a catalyst to accelerating development of token-based financial market infrastructures? Fernando, why don't you start, please?
You know, I have told earlier that one of the beauty of CBDC is not only a payment innovation, is also an interesting way to look at how we think about trade. Today, trade has two processes. There's a process to pay each other, and there's a process to exchange goods. Imagine a situation where you merge these two into a single transaction. Both the goods and the payment are merged into one contract. And that becomes your catalyst for a tokenized asset. Because the moment that process kicks in, the value of the asset in a tokenized form truly makes it meaningful and a real change in the way we look at assets. So that's one significant shift. Will make it make the tokenized asset as a very interesting way of looking at the new age of asset creation. The second part is, which I think going to be part of the big shift, especially in the Asian market, is that post COVID-19 and of course during COVID-19, there's a huge disruption to the supply chain, especially when the supply chain is going through some kind of decoupling. And now the supplies are being distributed to different places where the infrastructure which required to finance this trade are not necessarily available. So there's a transparency issue in the data before we can finance such trade. Here comes an opportunity to start implementing a blockchain-based platform, tokenized form of representation of documentation, which will increase a better way to do a supply chain financing, not only solving the which I said before COVID-19, productivity and efficiency was the big game. After COVID-19, it will be the efficiency and resiliency. To get to that state, you need a wider distribution of data provenance, a smarter integration of payment to assets, and all this requires us to go to that whole space of tokenized assets.
Excellent. Thank you very much. And I mean, if you think about Tom, London is obviously one of the, next to Singapore, it's one of the largest financial centers. How do you see the role CBDC could play to sort of, bring broader diversification, enable token-based financial assets to emerge, which could be of particular interest to the city? How do you see that?
So, I think, the mission of the Bank of England is to promote the good of the people of the UK. And first and foremost, I don't think about the city. Actually, I think about merchants. I think about businesses up and down the UK. And that's why I'm interested in the retail use case. In no way is that to dispute or contradict the importance of the wholesale cases that SOP has laid out. And I think there's huge promise there, and we're hugely enthusiastic. But I think the real debate is about retail CBDC. And we should remember that this is about improving the lot of our citizens and people in our countries. And I think the Cambodian example given is a really powerful example of that. I think there is huge gains to be made in wholesale markets, but really our focus at the moment is on retail. The wholesale financial markets, there's definitely space to improve back office. We've had our own program in the Bank of England to think about post-trade processing. And wholesale CBDC does have a lot of opportunities, but as do other opportunities in wholesale markets. Retail is really where I think it is. In terms of this discussion, I really want to strongly agree with something that both Sopnindu and Josh have said, which is in advanced economies, we should really look to emerging economies who are leading the way in this debate on central bank digital currency. And we should be humble enough to say that actually we can learn a lot from emerging economies. We need to be a bit careful about mixing together different types of concepts. So fundamentally, there are two different types of money. There's commercial bank money or privately provided money, and there's central bank money. Central bank money to retail users, at least in the UK, is only available in the form of physical paper banknotes. Some of the projects we've talked about today are similar to CBDC, but in my view are not CBDC. They are about commercial bank money being transmitted in new digital infrastructure. And actually, I think that's quite a fundamental question, because ultimately it is a question of, is your money provided by the state or is it provided by a private actor? And that's a really important distinction to hold. But the question which it presents us with is, how do we make the most of digitization, whether that's provided by private players or public players? And my very firm view is, when regulated properly, when subject to the appropriate safeguards, private money has a strong role to play just as much as public money does. And then my very final question really is, I think the debate we need to have, assuming there's a role for both private and public money, just as we have a role at the moment for commercial bank deposits transmitted via payment infrastructure, and we also have a role for banknotes, is what's the optimal mix of public and private collaboration? And I think that's why what the Digital Dollar Program is working on is so important. So sorry, I didn't really answer your question about tokenization and wholesale, partly because I think there's a bigger prize in the retail sector to go for.
And just a quick add to that, we need a very well-established regulated exchange to make it real. So that's the other factor behind to make it work.
Very good. I mean, I think, it's fair to say CBDC, of course, is about central bank money, and where central bank money plays a special role is where CBDC will have its largest impact. I have to say, I would tend to believe this is rather in wholesale, as we have many, many alternatives in retail. But I see where you're coming from. Now, CBDC will obviously have to coexist with existing legacy systems, and the seamless integration of CBDC with existing banking and payment system will obviously be key. Josh, if you think about that, how could this work? I mean, is this CBDC to substitute or more to complement existing payment processes?
So I strongly believe, and I agree with what Tom said, this is about complementing and basically building right now upon parallel tracks, but tracks that we know are going to intersect in the near future. So this, CBDCs have to get built. We have to understand how we're going to design them, and that has different privacy concerns depending on the country where they're getting built, different design choices. We know they're going to grow with other digital currencies, with Libra, for example, and we have to have our eye on the prize 1 year, 2 year, 3 years down the road of how these can be interchangeable and how these can work together. So that's how I see this, parallel tracks that need to intersect. But I want to go back to one thing you asked at the beginning, Usman, about sort of, adoption and the trends we're seeing. The biggest trend I see right now in the CBDC space is that the CBDC conversation has moved outside of central banks solely. And it's moved into finance ministries and foreign ministries. I mean, I'm briefing the State Department now on CBDC, something I thought I would never do a year ago. The first conversation with them, their eyes glaze over, but the second conversation, they get it because it's a China conversation in the US. And so this is kind of the sea change that I see in the Western world about CBDCs. And, there are risks to that, and we have to be careful about that conversation and not make this into some geopolitical power play. But it is the reason there's more attention to this issue than ever before. And I think we can use that as people who want to see CBDC adoption to elevate that conversation beyond the central banking community, because that's how widespread adoption will actually happen.
No, absolutely. And I can see that. I mean, one of the big challenges for the international economy is the gradual and orderly integration of the emerging market currencies. And clearly this is, I think, the challenge that we're all facing. CBDC is likely to play a role to be a vehicle for facilitating that integration. I'd like to go back to Asia. Swapnendu, you mentioned there's a lot of activity in Asia. ASEAN is looking also at greater financial market integration, in particular using local currencies. Could you explain a little bit, how could this work? We have in Europe similar initiatives in the Nordic countries with the P27, for example. What role do you think CBDC could play to facilitate financial integration at the regional level?
It's a very difficult question, and the answer to that can be highly misunderstood. So I think that there is this desire to create a sovereign digital currency backed by the central bank, respective central bank. Now the question is, do you need to build a interoperable foreign exchange system which will allow different currencies to be exchanged in the most efficient way? Well, there are implications. There are implications because we today operate in a certain centralized system in many sense, and how far countries will go and do a domestic currency settlement is to be watched and observed. I think there's still something to be watched for. But I think the bigger question, you asked the question, the second question, that what does CBDC will translate to? And you asked the question in the lens of payment. Today, there are two kinds of payment system. There's a domestic payment system. There's a cross-border payment system. And thankfully or not thankfully, both are not connected. So this actually gives an opportunity for CBDC to not necessarily worry about interoperability. It can actually be two different systems working for different purpose. On a domestic payment system, a country which doesn't have a good RTGS system or a faster payment system, they can just leapfrog by putting a retail CBDC, which I believe all of you go after this, go to Cambodia, look at that lovely payment system. It tells you how to build a RTGS at a fraction of a cost. If you are doing a cross-border payment, that's your broader question. Let's say in Asia, there are 10 countries trying to come together to make an efficient cross-border payment system, even if not doing an exchange of local currency, but minimally, if you can use a wholesale currency structure to solve out of the three problems a cross-border payment system has. One is an user experience, second is the AML CFT checking, and third is the settlement. The first two can be solved by an existing technology construct, but the third piece, which is settlement, perhaps works better with a decentralized ledger run by different central bank, and they can settle among themselves. The future of correspondent bank can be a little less pronounced. So this is why I think that the ASEAN or the Asian market will move in the future when it comes to integration of payment systems.
Fantastic. Look, unfortunately, we are almost on the hour. We have a few minutes left. Please offer your sort of final thoughts. What are, you think, next steps? Where do you see priorities for the institutions you're working with? What are the trends that you see that we should expect in the very short term? Tom, why don't you start, and then Yosh, and then Swapnendu for final words.
So thank you. Well, what do I see as being the future? The future that I see is that we have to take this incredibly seriously, make rapid progress. Again, to come back to the point that Daniel made, the big tent point, there is no way that central banks can do this on their own, nor should they do it on their own. We can't answer all the questions ourselves. The questions around what do retailers, what do merchants, what does it mean for competition? What does it mean for future payment needs? What does it mean for privacy? Those are things which need, as Daniel said, a really big tent. And that is going to be our focus in the UK, is moving forward with momentum, but also with very carefully considered analysis to make sure that we thoroughly explore this and collaborate very closely and deeply with a whole range of stakeholders to make sure that we really understand the issues here.
So, picking up on what Tom said, what I see as a trend and what I hope and what we're pushing for at the Atlantic Council over the next year is that some of the world's largest central banks, the Fed, Bank of England, ECB, the Bank of Japan, really move to the next level here. and move beyond the research phase into some pilots and collaborate on that and talk about their collaboration, talk about their transparency, talk about their design choices together, because those 4 central banks alone could influence the rest of the world by having this conversation in a more public and accelerated way. So that's something we're pushing for and we hope we see in the next year. And then, what I think overall is going to happen in the CBDC space is that people are going to start adopting it, talking about it, using it in a different way over the next year or 2 years. And that's because of the extraordinary amount of money that has been pumped into the global economy over the last 6 months in COVID-19. And so that has really changed the dynamic. There's just more money in the system than ever before. And so it's the actual perfect time to be thinking about the future of money when there's more money being generated by central banks than have ever been generated in history. So it's the right conversation at the right time.
Thank you.
And just to give just a quick one because they've already spoken everything I need to speak. There are 2 parts the 2 areas which will actually shift CBDC to production grade, in my mind, is trade finance and the capital market innovation, especially on the fixed income side. And there's a new kind of assets getting part of the capital market suite of product. They will change the game. They will make it happen. I think that's the big bet I have in my mind.
Fantastic. Look, I would like to thank you very much. I think on the last point, indeed, I think CBDC can be a catalyst precisely for this. It is the safest settlement medium, and it would lend confidence that token-based financial market infrastructures can offer the same quality of settlement that the legacy infrastructures can, and that should give a huge boost. I can see certain industries benefiting disproportionately. Foreign exchange, I think, is one of them. I hope the city will look at this. Look, I would like to thank you very much. Our time is up. Thank you to Tom, to Josh, and to Sopnendu for your great remarks. Next is David Treat. David is, of course, the one of the leaders in blockchain. He is the head of the blockchain and multi-party systems unit at Accenture, and he's also my boss. David, the floor is yours.
Thanks, Usman, and just Nandu, Tom, Josh, what a fantastic tour through everything that's happening globally in this space. I think you've left zero room for doubt that this is not an if and when question. It's a now and how, and just incredibly impressive tour through all of the constructs and progress that's being made on a global basis. I'm incredibly thrilled to be joined now by three friends and colleagues and compatriots in this push to this innovation frontier, and we'll add some additional perspectives on this push to the future of financial systems. So I have with me Aaron McCourt from Morgan Stanley, who's the global head of cash management, cash settlement, and payments control. John Whalen from Banco Santander, who's the digital investment bank head. Investment bank head of digital and innovation. John, I may have screwed that up. You can fix it. And Rob Palatnik from the DTCC, who's the global head of technology research and innovation. All three of you are pushing this innovation frontier and incredibly engaged, thoughtful, and have great experience. I think we in the next 20 minutes or so, we're gonna. What I want to do is explore, again, picking up with the last panel, the value and use case. Let's just start there, just ground ourselves in the value from the perspectives of each of what you're working on, and then get into a little bit of the, this is not a panacea, and it's not all rosy. Let's have that hard discussion around the risks, the challenges. What do we really need to be thinking about as we're pressing these pilot use cases ahead, and we'll see where it goes from there. So maybe just to kick it off, John, let me start with you, John. Besides fixing your title, talk from a Banco Santander perspective, and actually some of your roles outside of industry. Just speak for a second around the value cases that you're focused on and your observation of those value pools and the use cases.
Sure, and David, thanks. And regarding the fancy job title, I'm really just an engineer who works for a bank and gets to do cool things with new technologies. So I've been focused on blockchain and DLT going back now to the early days, 2012, and more recently then in a bank here at Santander since 2016. What I find incredibly interesting and really transformational is this idea of programmable digital money. That's what's different. The idea that you can potentially attach behavior to money, and whether that money is issued by a central bank or whether that money is issued by a commercial bank in appropriately regulated form. I think that what this new technology potentially allows is a complete rethink from an architectural standpoint of what the plumbing of the financial system looks like from a wholesale point of view, long before it gets to retail users. And it's incredibly interesting from a retail side as well, but those of us who work in investment banks, we're kind of tasked with examining these things. I come at, or Santander has been involved in exploring the central bank digital currency world really since 2016, when we got involved with a version of CBDC that's not quite CBDC, but it's in a related space, that it was originally called utility settlement coin. The idea that you could build a fully tokenized, blockchain-based, multi-currency clearing and settling system for cash obligations that runs 24/7, 365, and offers similar characteristics to central bank money: zero credit risk, zero counterparty risk, settlement finality with programmability built in. And that was a research project. Crazy idea. I remember myself and a colleague from UBS having this discussion in February of 2016. And we've come a long way since then. And here we are talking about central bank digital currencies with name brand, top tier banks, number one, and also, of course, the central banks themselves. So it's been a long journey.
Thanks, John. Aaron, maybe let me turn to you next and just talk about the your mission at Morgan Stanley around the future of your architecture.
Sure. So I think for us, there's, or for me personally, at least, I think there are a couple of things that are really interesting. The domestic atomic settlement. So as we've seen, lots of our different exchanges, Deutsche Börse, ASX, utilize distributed ledger technology for trading and settlement. The tokenized CBDC could be used for that instantaneous settlement. And I think that's an evolution, which is very attractive, particularly in operations, the idea of evolving rather than the revolution. And then the other one that I think is really interesting is the non-Fed wire settlement idea. And I think this is actually really interesting around operational resilience. So could CBDC actually provide a resilience opportunity, particularly for high value payments during a system outage? And, our regulators are very focused on operational resilience. And I think that's rightly so. But also we have seen some longer and, more difficult operational outages in the payment system. Last week was one. So I do think that this is becoming something that's actually, in some rather less glamorous ways, attractive in the wholesale space.
Thanks, Aaron. And Rob, the DTCC has been on a very public journey for the past several years in this space. Maybe just summarize it and your views on the most important value cases to be considered.
Certainly, and I guess first, listening to Aaron, I'm knocking wood, because anytime you're talking about an answer to resiliency, you're challenging the gods. So DTCC's remit is really to provide clearing, settlement, asset servicing, and information services for our clients around the world across a variety of asset classes. So we're not a payment service, but we've been exploring the opportunities a new payment infrastructure could provide across the entire range of our services. So an example is our trade information warehouse for credit default derivative, which will be moving to a digital platform. It processes a variety of trade lifecycle cash flows. Those with a payment infrastructure could be optimized for netting and settlement. On the equity processing side, we're currently building an application we call Project Ion, which is going to be a fully functional prototype on a digital platform. The prototype is being built on DLT. That's going to provide optional accelerated settlement and is going to operate in parallel with our production equities clearing and settlement system. There's obviously a cash leg to every trade. So the settlement process is going to require that exchange. And we had already planned to create an Ion Cash token, but it certainly can integrate with a central bank digital currency token. There are a couple of other areas where digitizing assets can make it more efficient to move those assets across trading venues or post as collateral, and where a wholesale CBDC can streamline the process. But I could really summarize it by saying that we provide a range of services to our clients across those classes, and each of them having their own settlement workflow and margin models. So everything is kind of separated into different silos. So it feels obvious that adopting a more efficient payment rail would allow our clients to better manage their liquidity needs.
Awesome. Thanks, Rob. And actually, I want to bridge something that Subnendu referenced, and conversations I know you, Aaron, you and I have had. Subnendu referenced those countries that may have maybe of a leapfrog their infrastructure and be able to jump straight to a CBDC for RTGS and other core infrastructure capabilities. I know, Aaron, you're very focused on how do you future-proof your infrastructure. Just talk for a second about your thoughts on that space and how does one approach that, and why is that critical as we think about a new technology like tokenized assets and CBDC?
Yeah, I mean, Dave, you and I have talked about this. It's one of the things that keeps me up at night. And there are a lot right now that are keeping all of us up at night. But, we're a bank. We're modernizing some of our legacy infrastructure. And so personally, this is something that I'm thinking about. I do think we need to all be part of the dialogue. We need to be thinking about the pilots that are out there, how they can affect what we're doing, and start thinking about some of those use cases and how we maintain flexibility as we're building in the future. On the other hand, I also think that a key tenet of the CBDCs needs to be interoperability and complementing existing systems so that there is the free flow of funds between the systems. So when the previous panel was talking, is it a replacement or is it a complement? I'm definitely in the complement camp on that.
Yeah, that makes good sense, and actually maybe just pulling on that thread a little bit, John, just talk a little bit about your observations around how that notion of standards, and the key topic of interoperability is developing.
Right. So the last thing the world needs is another liquidity silo. So we're automatically thinking this. It needs to be complementary to existing systems. Or to existing payment systems, but also not just domestic, but ultimately cross-border systems will need to interoperate. And one of the things we don't have today, for instance, if you think of an RTGS system, whether it's Fedwire, CHAPS, Target2, they're really just payments APIs. They're not quite as elegant, let's say, as the Stripe API might be, but they're just payments APIs. And wouldn't it be great if all those APIs were the same, or at least had a similar way to connect? It would make let's say, banks' lives a lot easier from an operations standpoint, from an IT standpoint. And with regards to standards, I'll give you an example. I'm the chairman of the board of the Enterprise Ethereum Alliance. David, you and I have talked about standards as being necessary for a myriad of different reasons, whether it's related to payments, financial services, or technology standards. Without standards, interoperability will not be achievable. So we need standards, and that means sometimes, herding the cats, getting everybody in the room together and hashing out some difficult discussions and questions around what are the right standards for these things. But it's been done before. SWIFT has a bunch of standards, CLS has standards. There's a lot of standards out there in the financial services industry. This is something we can do.
Yeah, and sorry, I'll pull on the thread even further. I know, Rob, standards, and let me throw in open source. Just talking about the dynamics of the importance of how the technology develops in this particular space. I know you've got strong views. Oh, you're on mute, Rob.
Yeah, I'm also on mute, right? The biggest thing with both standards and open source is just doing it and trying things out. Interoperability was given for a good number of years as the reason for the slow adoption of DLT. But it's kind of a chicken and egg thing. You can't have interoperability until you have production systems that are actually doing something that require a reason to interoperate with something else. So trying things out, letting different interoperability models get exercised in production, finding out, to Aaron's point, what is resilient, what can survive different types of disruptions and what can't, and what usually emerges is the best, simplest solution.
Aaron, let me turn to you then in a slightly different direction. As the operator, the runner, right? You run a business that can take advantage of this technology. How do you think about the value and potentially the potential to cannibalize your business, and how fast do you move towards a new model versus sweating the equity investments you've made over time? How do you think about that?
I mean, I think that's a tough question, but we're going to have to invest, right, in some new infrastructure coming up, and so really it's a question of where do you think you're going to get the most value in these different use cases, and some of them are out there, right? Like France, it's happening in the wholesale space. So I think the inevitable nature of some of that is going to show us where there is value. And then we're just going to have to make those prioritization decisions. Where you're, like we talked about before, where you're modernizing now, I think that is a good opportunity. Leapfrogging would be fantastic. I just don't know if we're quite at the point where we can make those jumps. But I do think some of it will be experimental. And so the more that we have out there where we can experiment and do it in small places and find out what's working, I think that's going to be really important for all of us.
Yeah, that makes good sense. On the operational side of things, the operational risks, John, how do you contemplate, as Santander is involved in a number of different pilots on different frontiers, how are you thinking about how to address the potential operational risks? What are you looking for in these pilots to create that, that safety, soundness, security that's required for core financial infrastructure?
Wow, that's a deep topic, David. Look, so let's I think operationally, for example, if CBDCs for wholesale payment systems rely extensively on the use of cryptographic keys, for instance, we're really going to have to understand fundamentally, perhaps beyond how we handle, cryptography and cryptographic key safekeeping already with very robust HSMs. There won't be it's potentially a systemic risk related to operational issues, particularly if there's some form of DLT involved, whether it's public, whether it's private, whether it's consortium, whether it's permissioned, etc. This is a new type of architecture that we're still learning a lot about how to keep up and running, what disaster recovery scenarios, etc. look like. I think it's entirely solvable. It's an engineering problem, but it's new. And anything that's new is going to have to take some time and will require additional scrutiny. And maybe we run both in parallel for a while before switching over incrementally over time. That story is yet to be told.
Rob, just continuing down the same path, the DTCC, obviously, arguably one of the world's, the world's most successful consortia ever. Or certainly has to rank in the top 5. In terms of your relationship with the clearing participants and your obvious standard and brand around safety, soundness, security, same question, what your observations, insights, wishes for how we develop this in a way that meets the core requirements of the capital markets industry.
Yeah, thanks for that question, David, because DTCC really focuses on resiliency first. We're all about operations and execution every single day, and making sure the integrity of the markets and the safety and soundness are maintained. We've built this on top of decades, close to half century of trying things out, engineering things, building this technology in a way that it's been battle tested integrated into operations dashboards, integrated into schedulers, into monitoring systems and alerting systems. Everyone knows what to do if something goes wrong at 2 in the morning, at 3 in the morning, and everyone has exactly what that playbook looks like and what our resiliency, which our regulators demand that we test on a regular basis, looks like from a recovery. So the starting point is that level of capability that's been there for decades with that technology. And now we've got a brand new technology. And it needs to be able to be hardened. It needs to be able to be tried out. Can it handle the scale, the performance, security, resiliency needs of the market? That needs to be able to scale to hundreds of millions. Really, if you think globally, it needs to be able to handle billions of transactions a day. A few years ago, we conducted a benchmark with partnering with Accenture to evaluate the performance capability of the technology. And it took a lot of engineering, but we were pleasantly surprised at the ability of it to scale. But it was really a pretty simple test in the big scheme of a wholesale use of something like a new payment rail. A real CBDC and a real use at market scale requires a different use, a different set of validation, a different set of testing. So we know that at scale, everything fails. So testing this technology to its breaking point and then pushing it further is really that starting point.
Yeah, thanks, Rob. We're in the dwindling minutes here. Just maybe let me just turn to each of you in sequence. What comes next? What would you advise folks to look for? We've obviously got a range of audience here. Over the next period in terms of either what you're working on or you're observing in the markets. How should people lean in? What should they look for? How to get engaged? And John, let me start with you.
Well, I run the digital assets program here at Santander, and I think all of the banks now have people like myself who are focused on these topics. I think we're going to see continued incrementally more complex digital securities issuances. I think we'll begin to see central bank digital currencies used in some of these real money pilots and experiments, and it'll be an incremental set of steps. And there's a ton of work going on, whether it's in startups, whether it's in financial services firms, whether it's in consulting firms. And the thing that's really exciting is that it's like one little community where everybody's exploring the cutting edge frontier. And that's.
And Aaron, maybe let me turn to you next, and I'll layer onto the question. Just John's referenced it, and the prior panel referenced it a few times. The whole nature of public-private partnerships, and just the nature of this technology. Same question. What to look for in the next period?
Yeah, I mean, similarly, we're starting to have much more dialogue internally about this, and I think the direction of the discourse is starting to kind of motivate some of this collaboration a little bit more. So keeping in mind these pilots, but also, there's a lot of research going on. And so I think that's another really interesting place to get involved. And some of these collaborative papers that are coming out, like the ISDA R3 papers around DLT. So I think there's a lot of different places to get involved and to see, but most importantly, having that internal dialogue at the firm and making sure that people are talking about and aware of and keeping it in mind. Even, everyone from the business through application developers, it has to be at the forefront of our minds.
Excellent. And Rob, same question to you.
So I guess just what I said about interoperability and hardening, we just got to try it out. We have to keep pushing forward. We're building our Project Ion prototype really to allow ourselves and our clients to try out atomic settlement, all different models of accelerating settlement to T1 to T0, maybe to real-time gross. And to see what happens. It's a prototype, so it's going to encourage experimentation and integration with a central bank digital currency would be a great way to try out some new models and experiment. There are many challenges, and as this thing becomes real, people are seeing those challenges. We're talking to all of our clients about this project. And today there are 200 million settlements this year. It's been, high volume, and the 200 million trade sides, and those turn into about 1 million settlements after netting. So if you now take away the netting part and say, all right, everyone has to settle everything atomically, that means 199 more settlements. Does that make sense? And is that something worth paying for? Does it make sense to pre-fund everything? If you're settling real-time gross atomic, and you're buying equities, but you were selling a money market instrument to fund that purchase, how does that work? If the timing is different across those different markets. So creating a real-time lab with real transaction copies that people, including our clients, can have real experiments, working with the industry, working with our regulators, potentially working with the central bank digital currency, I think is a great way to learn about what the unintended consequences might be and figure out how to move forward.
Excellent. Thanks, Rob. So I hope this was informative and instructive. I always enjoy talking about this topic and with these people. So if I were to just put a bit of a wrapper on it, again, just as the first panel established, I think, if you think about how this innovation wave plays out, having the core infrastructure players, the leaders and the businesses that underpin these use cases, there should be no misconception that this is starting here. There have been multiple years worth of work already underway in anticipation of what a CBDC could do to add to these use cases in these tokenized business flows and the whole notion of digital asset markets. The emergence of even that term of digital asset markets and the formation of those business groups and those roles is just a clear indication of where we're headed. And as I started, I think hopefully everyone's seeing that from an innovation frontier perspective, we are squarely and soundly in the now and how, and no longer the if and when. So with that, Rob, Aaron, John, thanks so much. Really appreciated your engagement and dialogue, and it's always great to speak with you. And at this point, I've got the pleasure of turning it over to Chris Giancarlo, and I can't help but to again link back to the first panel. Sapnendu, of course, Chris and I actually, first started talking about this whole notion of the digital dollar project at the Singapore FinTech Festival more than a year ago. And so I think it was only fitting to have you here today. And Chris, thinking about the progress we've made over the past year is just incredible. So I'm going to turn over to Chris and a great discussion around the retail side of the pilot and use case frontier.
Thanks very much, David. What a great panel that was. We began the program earlier with a great discussion, and I enjoyed Tom Mutton's emphasis on the retail use of CBDC, and then juxtapositioned against Sapnendu's discussion about both the wholesale and then the retail efforts that are going on in Southeast Asia. Well, this panel now is going to take a chance to drill down into the retail side of that, and I'm delighted to be joined by Kabir Kumar, who's the director at Flourish Ventures, which is an evergreen fund that makes impact-oriented investments in personal finance management tools, challenger banks, regulatory innovations, and other technologies that empower people to foster a fairer, more inclusive economy. Kabir is a graduate of the Maxwell School of Syracuse University. And in addition to Flourish, Kabir serves with me on the advisory board of the Alliance for Innovative Regulation. And also Shelley Swanbank, President, Product and Platform at Western Union. In a role, Shelley advances Western Union's dynamic cross-border and cross-currency global platform to support the company's expansion to multiple customer segments. Previously, Shelley was Group Operating Officer for Accenture Digital, establishing it as a market leader in digital services. And Shelley holds a Bachelor of Science degree in Finance and Computer Information Systems from Colorado State University. And finally, we're joined by Usman Ahmed, Head of Global Public Policy at PayPal. His work covers a variety of global issues, including financial services regulation, innovation, international trade, and entrepreneurship. And Ahmed is also an adjunct professor at law at Georgetown University Law School, along with Daniel Gorfine, where Ahmed teaches courses on international law and public policy issues related to the internet. He earned his JD from the University of Michigan, his MA from Georgetown University School of Foreign Service, and his BA from the University of Maryland. So thank you, everyone, for joining us today. And let's start off with the value of domestic retail CBDC, as distinct, say, from wholesale uses and other. What gets each of you excited about the potential value a CBDC can drive? And maybe, Shelley, maybe you would lead off.
Sure. Well, first of all, thanks for having me. You know, I think for me, if I had to pick one use case, if you will, it really is about being able to get public money straight into the hands of citizens. And I think, as Josh said, we probably all understand that use case better than ever now, given the COVID situation over the last many months, and governments around the world trying to get money directly in the hands of citizens, whether that's for stimulus funds or, let's say, normal benefits, if you will, maybe even disaster relief. You think about being able to get money directly in the hands of consumers in disaster relief scenarios. I think that's super exciting. And I guess the other thing that is exciting is just who knows where this will lead, right? Every innovation leads to another innovation. And so I think there's a lot to be said about that. And I think the idea of people talk about financial inclusion, and maybe we can talk about that a little bit later, but I think perhaps this could yield better financial inclusion for some underserved communities.
That's great. Usman?
Yeah, let me put a finer point on what Shelley's raising and what Josh highlighted when it comes to the stimulus payments in particular. 20 million Americans received checks of the 100 or so plus million that received payments for the government. Some of them took as long as 3 or 4 months to actually receive their check. And you can imagine living on the margins, living paycheck to paycheck, and waiting 3 or 4 months to actually get the money that the government is saying is yours. That is a serious challenge, and something that retail CBDC, from our perspective, could be really interesting to help fix. I'd expand it beyond that. You know, Governor Powell has talked about grants for small businesses in the next wave of relief. I mean, again, that would be something that presumably could be done through a CBDC. And then, you know, tax refunds. There are tons and tons of bills and payments that government has with individual citizens and businesses. And so, you know, improving that entire system is something that, you know, we are excited to understand and see if we can be helpful with.
Yeah, it's a system that certainly can use some improvements. I saw a statistic that somewhere in those relief distribution, over a million separate deceased individuals received close to over $1 billion in relief payments. That's certainly not going to stimulate any economic activity, but it's just an inefficiency in the system. Kabir, from your point of view, what gets you excited about CBDC in the retail context?
Thanks, Chris, and thanks. It's great to be here. I think we also spoke on the sidelines at the Singapore FinTech Festival over a year ago. I think Usman, Shelley, and I seem to be singing from the same song sheet here. We actually commissioned McKinsey to look at the relationship between government response and digital infrastructure components. They looked at 11 programs, 6 countries. The US is at the bottom of the list, in part because the core public infrastructure, the public-private infrastructure failed. And so I think that's what's exciting us. The way I see CBDC, Chris, Usman, and Shelley, is like the internet, right? I mean, we need it. And it's going to unlock all this private innovation. We don't know what it's going to look like, but we need it. And we need that infrastructure investment like we made in the internet many years ago. There are 4 areas where I think that it's going to make an immediate impact, and it's already coming into view based on all the discussion we heard today. On payments, the distribution of money right into people's wallets, on identity, as you alluded, Chris, on data sharing, and also on the regulatory system, the regulatory reporting and AML system that complements that.
That's terrific. It's funny you mentioned that we met on the sidelines at the Singapore FinTech Festival last year. Well, the festival's coming up again this year. And Matt, it's remarkable how different it's going to be. What a difference that year has made in COVID. The festival is going to be much more of an online experience, but I'm delighted to be participating. So we'll have to find a way to be on the sidelines of it once again. But let's drill down a little bit more into financial inclusion, because I think that it's one of the things that's changed in the last year. Constituencies that hadn't spent a lot of time thinking about CBDC, I think because of the inexactitude of delivering relief during the crisis and the recognition of the 6% of at least the US population that's unbanked and maybe 25% that's underbanked, a lot of folks that hadn't thought much about CBDC are suddenly thinking about it as perhaps a means of addressing that unbanked and underbanked population. Shelley, can I go back to you to give us some thoughts? I know with your work at Western Union, populations that perhaps are not considered to be fully banked have long been constituents for yours. How do you think about CBDC and how it may be utilized to address some of these populations?
Yeah. Well, first, I guess the first point is access will be important, right? We talk about financial inclusion, but digital inclusion will be important too, because some people that are underserved by current digital solutions, it's usually for a couple of reasons. One, they may not have access on a regular basis to, smartphone, the internet. They may live somewhere that access isn't pervasive for them. And two, they don't trust the system. So I think what's going to be very important for any implementation of CBDC is to create that trust. And perhaps, some of these underserved citizens by getting money directly, stimulus money, benefit money, tax returns, et cetera, directly through a CBDC, that will begin to then establish trust for other sorts of, bank or other digital solutions. And so I think that could have a nice knock-on effect and help from an overall financial inclusion perspective.
It's so interesting that you mentioned trust, right? Because trust is one of the notion of centralized providers of trust and perhaps replacing them with more of a decentralized consensus-built development of trust is so critical to this new technology. And so maybe, Usman, I might ask you, as you think about it, as PayPal has built networks, trusted networks that people can use to conduct commerce online and elsewhere, how do you think about underserved populations and how CBDC may perhaps provide the trust element that wasn't there for them not to engage in the financial system to the extent that was the barrier for them?
Yeah, look, I before I jump into trust, I'd just say, I appreciate you taking this broader lens of financial inclusion. So certainly the FDIC survey that found that about 5% of Americans are unbanked. The number one reason they reported as to why they're unbanked is they don't have the money to put into the bank, right? And so to Shelley's point, if you're getting money directly put in, you're probably much more likely to want to use the system. So there's just an interesting kind of very obvious almost reason there. But then when it comes to trust and ubiquity and usage, I think you're talking not just about 5% of people. You mentioned 25% of people underbanked, meaning they've used a non-bank financial service, but 47% of Americans don't have $400 in savings, right? So it's actually a lot broader of the population that needs a lot of help when it comes to financial services. And so, I think trust is a big part of that. I think usage and ubiquity, the ability to buy stuff online, buy stuff, what you need in person, send money to people you need, receive money, and get credit, as Kabir was talking about, I think, and alluding to, the ability to add on services in an efficient and clean way on top of the payments. That's really where I think what we've been alluding to, that the innovation that could be built on top of a baseline payment system is very, very exciting. And again, that's something that I think we could be helpful with, but I think a lot of players in the financial services ecosystem can plug into this and benefit from it.
Thank you. Kabir, would you want to jump in on the ability to reach underserved populations with this new innovation?
Yeah, we've been talking about the U.S., but there are an estimated 1.7 billion people globally who are outside the formal financial system. And they're outside the formal financial system, but as all of us know, they are using cell phones. And in some countries, they are leapfrogging from basic cell phones to smartphones. So there's a way to reach them. And over the last 10 years, it's actually been technology-driven innovations that have brought hundreds of millions of people into the formal financial sector. CBDC, I suspect, will play a big part in the next 10 years to bring people into the formal financial sector. But I think there's something beyond inclusion. And that's what I think Usman and Shelley were getting at, which is once people are in the formal financial system, is it working for them? You know, and we talked about payments. I think throughout today, we've been addressing sort of from the wholesale to the retail aspect of payments and the ability to move and settle money instantly. And this is a game changer. It's a life changer for people who have less money. You know, and Aaron Klein at Brookings has documented how low-income Americans could retain over $10 billion annually in their bank account if money moved faster. Because if money moved faster, they don't need to use check cashers, they don't need to use payday lenders, they are not subjected to bank overdraft fees. So the power of systems that work better, that are efficient, that are instant, that are real-time, which CBDC promises, is not only inclusion, but it's fairness. Building a fair financial world that ultimately has the greatest impact on the most vulnerable.
So let's take it from sort of that high-level view down to real practicalities. Kabir, in your investment work at Flourish, you probably see a lot of opportunities, a lot of innovations of a very practical nature. What are some of the trends you're seeing? What are perhaps some of the actual applications that maybe get you excited, that you think hold promise for the longer term?
Chris, you know, as I was saying earlier, I see CBDC, you know, the sort of government official part as well as the tokenized infrastructure, like the internet. I feel it's the next it's the next internet element for us. We build the internet, but we never build the internet of money. So it's very hard to predict what business models will emerge. We didn't know that then. We didn't know eBay would emerge and it would change the world, for example. But we are actively investing in the private financial infrastructure. In fact, the private financial infrastructure just driving the front-end retail innovation is getting completely revamped right now. This is all areas: payments, identity, AML, fraud. We are actively making investments in all of those spaces. And at the same time, finance is becoming, as a lot of my venture capitalist colleagues like to say, embedded in all our digital experiences. You know, the Etsy payments, for example, you know, all, the ability to get payments, process payments, the ability to get access to credit is being embedded in all these digital apps and all these digital experiences. Again, infrastructure players are driving that. My view is that, you know, entities that have a stablecoin component in that or have a tokenized component in that, they are going to arguably get turbocharged when CBDC comes into existence. So we are keeping an eye on that. We haven't made active investments in that space. The other big trend is what Usman mentioned, right? 70% of Americans are still struggling. Actually, 70% of Americans that are financially unhealthy by some measure. There are 8 dimensions that the Financial Health Network looks at. Disproportionately Black and brown households. We just did a study that looked at gig workers. We call it Digital Hustle. It's a multi-country study. We focused on the US. Again, huge impact of the COVID crisis, as all of us know, again, disproportionately impacting Black and brown households. We are making these infrastructure investments because we believe it will unleash front-end innovation. I have due diligence companies that have really interesting ideas to give people access to investment opportunities, give people access to savings opportunity, as Usman mentioned, new credit products, but they struggle to build and configure those products on the existing infrastructure. They need a better infrastructure to bring those pieces together. Those are the trends that we are seeing that we're excited about.
That's very interesting. You know, in our work at the Digital Dollar Project over the course of 2020, when we talk about retail usage, one issue that just seems to come up again and again and again, it's a very important one. It's the issue of privacy, and it's the issue of what should be the expectations for retail use of CBDC of the individual for their privacy rights. How similar is it to the use of, say, the dollar in the cash markets, and what's the balance, the legitimate balance of that between the needs of law enforcement and the official sector to monitor transactions for, you know, really bad things, money laundering, drug trafficking, human sex trafficking, the kind of things that I think society expects law enforcement to oversee. How do we get that balance right? And perhaps, you know, where would you put the balance in that scale? Because we do have the ability to choose these balance points as design elements as we design CBDC, where would you put it? Maybe Usman, I might turn to that because I'm sure privacy is an important issue for PayPal and something you've spent a lot of time thinking about.
Absolutely. Let me largely agree with you that it's just a very challenging policy choice because, as you highlighted, certainly individual citizen privacy is an incredibly important value, as is, making sure that our financial system is not being used for inappropriate, terrorist financing or money laundering or criminal activity. And it's an issue that PayPal has dealt with since our inception. And actually, this whole concept of tokenization that is so central to CBDC and the broader conversation, that's what we kind of architected 20 years ago to protect people's credit card information or bank information, right? It was setting up a token. It's the same concept that we're talking about here. So I don't know if I can answer the policy choice. I think the good part is we actually have a policy choice to make, whereas with other forms of payment, you might not have that policy choice. The last thing I'd just add, though, is the other dimension to this is, as we mentioned, there will be layers built on top of this. And one could imagine a digital wallet provider offering a privacy or a security solution on top of the CBDC that might be tailored to a particular consumer's desire, whether that's to share a lot more information than others or to share a lot less. So I wouldn't look at it purely in the first layer of issuance as an issue. It's actually something that will build out towards the broader financial services ecosystem.
Great. And Shelley, I might ask you the same question, because there too, I think that's something you've probably spent a lot of time thinking about at Western Union as well.
Yeah, I maybe just building on what Usman had to say, I think there will be different options about how to implement this. I think ultimately this will be critical for a CBDC to flourish, right? Is to be able to do both. I suppose maybe just taking a bit of a different view, instead of thinking of it as a balance between one or the other, it really is a requirement to do both, right? I mean, keeping the privacy and obviously protecting the data of all of the participants in the system is critical, but keeping the bad actors out is absolutely critical. And so it is, to me, it's a little bit less about the balance between the two and more about the implementation, I suppose, and how you do both at the same time.
Indeed. And I also, just before we wrap up, I do want to talk a little bit about crypto, because there's lessons to be learned, I think, from the crypto space that may apply to the CBDC space. And Usman, I might come back to you on this one because I know PayPal is engaging that area. Are there lessons you think that can be learned from the last few years' experience in crypto and its growing maturization that might be applicable to the development of CBDC over the coming decade?
Sure, no, and certainly, we had some news, I guess, about 10 days ago on this front in terms of launching the ability to buy, sell, and hold for specific cryptocurrencies in the PayPal digital wallet. I think the first lesson is, we did it in compliance with existing laws, right? So having that, as Kabir keeps alluding to, having that regulatory infrastructure and the confidence to be able to offer a product that's going to be overseen is actually very important for the private sector. And so this broader effort that Chris, you're leading is just so important, I think, as we're building this out. The second piece is being able to have those digital wallets that offer security, connectivity into the individual users. This public-private partnership that's also at the center of what the DDP is doing, I think, is the other key learning that we are taking out of this is how do we build the ability for people to add new forms of payments, money, assets into their wallet, because that's what people want, and they want to be able to use there are different tools that, as we've said many times on this call, I don't think any of us see CBDC replacing all the other forms of payment. They're going to continue to exist because they have uses. So that's really, I think, one of the big learnings for us is how do we continue to add functionality for different users based upon what they need and what they want.
Kabir, would you add to that?
I wanted to quickly talk about the previous question, Chris. I strongly believe that the trade-off is a false trade-off. It's a false dichotomy. We do need to address privacy concerns. And in fact, the timing is perfect. As you know, as a country, we are heading into looking at a national data law of some sort. And more importantly, and this is something that's often missed in the conversation, our laws in the financial sector that govern data. are severely outdated. They are a patchwork of 7, 8 laws. They are, as one study just observed, are point solutions. They're not comprehensive. They're not cohesive. We need to upgrade those anyway. I mean, the Financial Modernization Act of 1999, right, before the iPhone, was in an era of the marketing mailers. It was addressing privacy concerns associated with that era. So we have a huge upgrade we need to make anyway, and I think the timing is really perfect. I think in terms of the sort of lessons to be learned from the crypto space, the consensus conference is kind of interesting. As the years have gone on, it has become, gone from 90-10 or 100% non-regulators, no one was there, to largely policymakers and regulators over the years. And that's a great sign. And that's a sign of how regulators are very ambitious about embracing innovation, increasingly. They're ambitious about embracing innovation. And we've been very closely involved, Chris, you're aware of this, with Joanne Barefoot and the Alliance for Innovative Regulation to bring regulators along, not only in the US, but globally. So I'm very confident that the right minds around the table, we can address these challenges.
Thank you. Actually, it gives me a chance to give a shout out to my successor at the CFTC, Heath Tarbert. Just yesterday announced a revamping of their whole data infrastructure, the appointment of chief data officer, a division of data. I think it's the first agency to do it, and it is really the right move. Agencies need to become quantitative analysis regulators, something I called QuantReg during my time there, and I think that's a really step forward. But I do want to move back away from privacy and crypto for a second. And before we close, it's just really important that we touch upon the issue of remittances. There is close to $1 trillion in remittances moving around the world every year. A lot of that from the United States. And Shelley, I want to turn to you because this is an area where Western Union's got a lot of experience. How do you see the impact of CBDC on remittances around the globe and here in the United States?
Yeah, well, I suppose first thing is it'll depend a lot about how it gets implemented, I guess, and what sort of demand that creates from consumers, small businesses, and the like. I think one, maybe just picking up what Usman said a bit ago, right? I don't think any of us see it as replacing necessarily remittance solutions that are on the market today, but perhaps creating some new innovations, right? There are lots of options on the market today, all digital, by the way, whether it is, transferring money to or from an account, a wallet, a card, even cash in the instance of like our business at Western Union, right? Putting in cash, what are we doing with that? We're digitizing it so somebody can deposit it in a bank, a wallet, or pick up cash on the other side. So and more and more these solutions are, they're faster, there's more transparency. So I think ultimately it's going to depend, how does the CBDC get implemented, and can it augment or improve the remittance products that consumers have access to today? Now, we've talked a lot about already in this panel, there are many people that don't participate in the more digital products because they don't trust the system, or they just don't naturally, they're not naturally part of that financial system. So I think with the CBDC and getting those folks into the system, if you will, could have an impact, and a positive impact from a remittance perspective. So, I guess we'll see. Certainly, we're excited about what this could be from a financial inclusion perspective. Obviously, we're also looking at it just in terms of how can it make the remittance process, everything from things we've talked about today, the user experience, all the, AML, KYC stuff, settlement. If it can make that whole system more efficient, ultimately that will benefit consumers and businesses.
Yeah, you make a very good point. That those percentages about unbanked and underbanked populations, they're not a monolith. It's a very diverse community in those categories, and their issues in terms of access to financial services have everything to do with, or have things to do with from rural issues where there's not a lot of bank activity or not a lot of broadband access to inner city communities, to immigrant communities. It's a very, very diverse, and therefore it's about giving them access points, but it's not necessarily, there's no silver bullet to addressing those issues. And Usman, is there something that you'd add to the discussion of remittances? Because I'm sure it's something you've also thought about at PayPal.
Yeah, look, again, it's really about the speed, the trust, the ubiquity, right? If there's an ability to get money into the system faster, cleaner, simpler than cash, I think people are going to turn to it. And I think it will, that's where I see CBDC playing the biggest role is as a cash substitute, right? Rather than all the other electronic payments that already exist. The last thing I'll just leave with to wrap up from my end, we talked about the 20 million stimulus checks. Chris, you were alluding to this. 13 million people also received interest tax refunds from the government this year, as small as $5 as a check. Can you imagine sending a check for $5? It costs more in the mail and to send than the actual value of the thing. And sometimes remittances have that kind of cost structure as well. And so to replace that with something that actually gets money from point A to point B to the person who needs it, that's what we're really excited about.
All right, I'm going to do a quick lightning round, folks. So as quickly as you can, tell me if we could launch one public-private partnership pilot program, say on January 10th, 2021, to test out use of CBDC, what would you suggest we do? And I'll start with you, Kabir. What should we test?
Okay, government money into people's wallets and complete the chain of transaction with them moving it into a savings account or making a purchase on Amazon or another platform. So we demonstrate the full chain within a period of time, and ideally building on all the technological knowledge already captured at Singapore and London and elsewhere.
Terrific. Usman.
I mean, certainly Kabir's idea is great. I'd say, small businesses are a key part of the payments ecosystem. And so if we can figure out a way to get, them into the system early, particularly, minority entrepreneurs who've traditionally struggled with the existing financial system, if there's some way to tie them in through a pilot, maybe in a small rural area or something like that, you could really have a very powerful early pilot for this.
That's great. Shelley, what pilot should we do first?
Well, I like both of those ideas. I guess I'll vote for Kabir's idea to start with, going from the government and getting the money directly in the hands of the citizens, because I think that's just critical need there.
Great. Well, thank you very, very much, Kabir, Usman, Shelley. It's great. And Daniel, we're going to hand it off to you. We're ready to go on pilot programs January 10th, 2021. Let's get going.
Excellent. Well, I want to thank... Oh, sorry, Chris. I want to thank everybody for joining us today. I personally think these have been some of the most insightful and interesting discussions on CBDC that I've heard yet. So I really want to thank all of our panelists and excellent moderators. So what I'm going to try to do is summarize quickly what I think I heard. And I'm going to go back to the theme I set out at the beginning, the moving from if to how and even when. And I think that these discussions really underscore exactly that transition that we're seeing in discussions around CBDC and the potential for real-world implementation. So on the first panel, I think my favorite line of the day was when Supendu said that Singapore is no longer testing CBDC because it works. So that was great. He talked about it largely in the wholesale context, but then we heard from Tom that from a Bank of England perspective, there's a real focus on the retail side of CBDC. He also appreciated my statement at the beginning that this is all going to require a big tent because of the number of different implications and the ways that a CBDC will trickle through a global economy and all the different stakeholders that it hits. We heard from Josh on global activity, really underscoring actually activity in South Asia. On our second panel, awesome conversation about wholesale application and markets. Aaron talked about instantaneous settlement and the potential of that with CBDC. John really emphasized infrastructure and plumbing, and I happen to very much agree with that. I think that a lot of what this is all standing for is the upgrade of our systems, the way we transact, the way we send information about value. Rob talked about real-world implementation of DLT systems within the markets and within that plumbing and infrastructure. And finally, we just heard, so I won't spend too much time because it's fresh in your minds, but we just heard an awesome discussion on retail application and the potential for enhanced access, inclusion, the potential for government relief being distributed through these systems. And what was interesting is it also highlighted the importance of public-private partnerships and implementation. We talked about privacy, and obviously privacy is a major theme. Danielle flagged at the outset that we've created a privacy subgroup to focus on these issues. We also talked about identity, because digital identity is a core component or element, especially when you talk about retail application of CBDC. So overall, found it to be a fascinating day. Really thank everybody for participation. And again, because this requires a big tent, we encourage public participation in something that's truly transformational and has the potential to have a very positive impact on society. Chris, I think I may turn it back to you if you have a final word, and then we will try to stay true to our time here at 10:30 Eastern time.
Great. So Daniel, when you and I penned our op-ed in the Wall Street Journal a year ago this month entitled, "We Could Land a Man on the Moon, we can certainly send the dollar into cyberspace," I think we never anticipated the amount of momentum that would occur over the course of that year. And David Treat, when you and I were at Davos last January and announced the launch of the Digital Dollar Project, I think we never really anticipated how much of a catalyst would come about. But the catalyst perhaps wasn't so much all those conversations. The catalyst was COVID. COVID has really sped things up, and COVID has brought an important constituency to bear in this conversation, a constituency that perhaps wouldn't normally think about things like digital money and distributed ledger technology, because this constituency is a constituency that's concerned with social issues. And I think that the inability to get relief to people in a crisis, the inexactitude of using paper money and accounts-based money has really gotten a much broader group of folks. Daniel referred to a big tent, brought a big tent to bear. And COVID has done a lot of things, but it's really sped up time. Trends that might have taken 5 to 7 years are really now accelerating in the course of a year. And I want to end today's discussion with a prediction. Next Tuesday, we're going to have a major election in the United States, and it's going to result undoubtedly, no matter who wins, in a lot of change in public policy, whatever is the outcome. But here's my prediction. A year from now, whatever the outcome of next Tuesday, there will be still more development, still more enormous activity around the world on CBDC. I predict there'll be no slowing down, whatever the outcome of this election, both in the United States and around the world. And, you know, right now, there's a number of, you might call them pelotons, moving forward at the central bank level. And we discussed some of them today, certainly the Bank of England, the Banque de France, certainly Singapore, Japan, South Korea, and others are in that first peloton. I would say the United States probably is in the middle peloton at this stage, not out in the first one, certainly not in the last one, and somewhere in the middle peloton. But you know, the thing about pelotons, if you ever watch racing, they still need to keep up with that first pace peloton. There's a lot of work to be done here in the United States to keep pace with that front peloton. And you know, it can't be done by the official sector alone. The right approach is a Big Ten approach. The right approach is public and private sector partnerships. That's the way the United States has always done big projects. And that's what the Digital Dollar Project is here to do, to bring that private sector involvement, energy, enthusiasm, ability to do big projects fast, on time, and finance them, and bring the energy, enthusiasm of the private sector to bear. So we look forward to continue our work with the public sector to make to explore a central bank digital currency. And stay tuned. The Digital Dollar Project has a number of projects underway. One in particular, a work on privacy by a new privacy subgroup at the Digital Dollar Project. We'll be presenting early in the new year on their work in the field of looking at privacy issues related to a U.S. digital dollar. And there's other work underway that we'll be announcing in the coming months. So thank you very much for today. It's been really a great program. We thank our participants. We thank our audience.